that. You know nothing about blockchain, we here to fix that. You want the news on the new stocks, this where you get.
And we are live with Nick Black's microphone in 5, 4, 3, 2.
All the financial podcasters. So I watch these other podcasts. This is how it works now. This is what you do.
Yeah,
if you're a financial podcaster, you have like one or two eyes showing, and this is and they're okay with this. And for some reason, their producers are okay with that. They're like, "Yep, no, that looks good. That looks good, Sven or Yanni or whatever your flipping name is."
What do you think the strategy behind this is? Is it just sound? They want more of a podcast only type scenario? Is that what's going to work for these guys?
You have to eat. You got to eat the microphone, Brandon.
Yeah, I mean, that's the best. No, yeah, I mean, obviously.
Eat it.
Obviously.
This is great. This is good content.
This is it.
I would listen
Nick,
to this guy,
today?
and it's it's always the most out of shape creeps. Listen, if your guru eats the mic and you know that he's eating everything else, stay away. Stay away. If your guru can't do 20 push-ups, stay the F away. Your guru is a food guru. He's a flipping pizza guru.
How many push-ups can you do, Nick?
22.
Yeah, I'm at 23, so just barely. That's only because I cheat on that last one with 2 legs down on my knees. Whew. Whoa, we lost sound. I think that the whole microphone shenanigans messed things up. Oh, crap. Oh, crap. Oh, no, Nick. We messed everything up, but that's okay. We're going to do the show without. I'm going to go through the rundown while you get this thing fixed because it's still like, no, we still don't got sound. Oh, crap. I'll let you know as soon as we get sound. I'll give you a heads up. This is not good, Nick. This is not good. I think we messed everything up. There we go. So here is, oh crap, let me take Nick off here a second. This is the rundown that we're going through today. Obviously, we got the market review crypto Q&A. We got cashless systems. Let's see here.
Security warning.
Oh, you got a security warning? Those Apple ones, huh? That's what it.
Yeah.
Yep. Okay, that's what it was.
Oh my gosh, that was weird. Hold on. I gotta do. Okay, is the screen share fine?
Yeah, scroll around for me, will you? But we got tons of good stuff. There's some questions in chat on what's juicy in the market right now. There's a lot of, yeah, it looks good, Nick. There's a lot of information in the market that's actually really juicy right now that we have over. Twitter's popping off on a few things. Your sound's off now again. Yeah, don't cuss too bad. I guess you could cuss because you're muted, so we're good. That is correct. But we got a whole bunch of stuff happening on Twitter, and I know that you guys have all seen the CZ stuff that's happening right now with CZ. The information going on with him. He responded to those statements. Obviously, you guys saw a lot of that happening. But Nick and I were talking just a little bit before the stream. You're good now. You can talk, Nick.
Hey.
Yeah, you're good. Don't move a muscle, and you're good to go.
I'm not doing nothing.
Nick and I were super excited. We were talking a little bit about, and I don't know if a lot of you guys out there use MetaMask, right? We were talking about the possibility of a MetaMask airdrop. And a lot of these airdrops that we've been getting over the last year are from using either wallets or the services that these tokens or these things provide, like the Arbitrum airdrop this last week, right? MetaMask airdrop would be pretty cool.
Can you imagine? So, look, in the 2021 NFT days, just a wide estimation, would you say what was the net amount? No, we don't use net. What was the gross amount of transactions you probably put through MetaMask, or at least your wallets in general?
I can tell you this, Nick. There's something that tells you how much gas you've spent on MetaMask transactions. And that made me sick when I looked at it. Let's just say that. I cannot believe the amount of gas burned. Even this year to date, the first 3 months, like it blew my mind. And so 2021, 2022.
Dude, that's when I was buying Beeples. Yeah. I was buying Fuo paint. I spent 50, man. I think I spent 50. I think I spent 50 ETH on paint. I spent, well, that one back there, the Abundance, the Beeple, that was $70K. And that was an auction.
Yeah.
God. So
Yeah.
I bet I've spent, I don't know, $5 million during 2021. Not in gas fees, but like of just moving tokens back and forth.
Yeah, that's the thing. I mean, and here's the thing: those MetaMask airdrops. I saw a screenshot of supposedly what an insider said would qualify you for the airdrop if there were to be a mask token released, and a lot of it just isn't strange things. They said there was bridge transactions. They said there was staking that you've done through MetaMask, but a lot of it is just sheer transactions. The amount of transactions that you do,
like staking, say, Singularity DAO tokens or NewNet tokens or Singularity Net tokens, those kinds of things.
Well, I'm glad that you brought that up, Nick. That qualifies all three of those. That's perfect.
Yes.
Qualify. And supposedly the snapshots already been taken. This is all conjectured rumor, but this would be a big deal for those who use MetaMask and those who've gotten off an exchange. And I know a lot of the digital heavyweights have done this. So a lot of those guys would qualify for this airdrop, and it could be a fun little thing for them, because what airdrops, they're just basically free tokens, which I love.
1, 2 free. That's my favorite number, everyone. 1, 2 free.
Yep. 1, 2 free. That's it.
Okay. What else was interesting? I mean, there's a lot of stuff that's interesting. USDC is coming to Cosmos, to the Cosmos ecosystem. So a further spread of that dollar. I noticed someone in the chat earlier had asked, this is kind of a blanket question, is a CBDC in the future? What do you mean, is it in the future? There's like 20 countries that are already have them, that are in various stages of testing. So yes and yes. Is a United States token in the future? Yes, but it's probably going to take a minute. So I guess I don't, the US is making some poor game theoretical decisions. If the US pushes crypto out of the US, for me and you, Brandon, for those of us, for the heavyweights, for all of us that are in the crypto space, it's going to be better. It's going to be a lot better. In the early days of crypto, well, I say early days, really 2014 to 2017, when the US government said, crypto is not real. It's fake. It's funny money. But basically what they're still saying. Everything happened pretty much outside US jurisdiction. So if the US government, without regulation, pushes exchanges, crypto facilities, token launches, and all that outside the US, this is a good thing. I know everybody is probably looking at this the other way. I'm sure you can read into what I'm saying why this is a good thing. And I'll leave it at that. We'll go into more detail in the heavyweights, but certainly not on a public broadcast, good sirs. So without further ado, should we do the Q&A first? Should we knock out those questions?
I
so
love
that we
the
can
Q&As
help
first.
the
And
most
just a
amount of
little
people? Yeah.
Anecdote to that too. I feel like the US, for some reason, is the furthest behind on crypto adoption, actually.
They're so stupid.
Just because I don't know why, and I don't know why there's such a pushback. And I think it has to be related to control issues, other things like that. But I definitely
think it's simple.
Furthest
I
behind.
think it's simpler than that, Brandon. I think it's legacy banks. You have a huge problem right now. For anybody that has their head in the sand, regional banks are going away. You guys get this, right? The banking catastrophe that's coming, it's not going to be the big banks. They've all been de facto backstopped by the government. The Treasury, financed by the FDIC, which, by the way, is insolvent itself, has given a de facto infinity backing to all bank accounts in big banks. If you're in a small bank, if you're in a regional bank, those banks are going away. If you don't see the writing on the wall, you're a fool. And also, I mean, on the other side of it, do we need 7,000 banks in the United States? I don't know, Brandon. Do you think we could function with less than 7,000 banks in the US? I mean, couldn't we have a couple hundred? Wouldn't that be okay?
That would work. I mean, besides diversification of assets throughout the different banks, yeah, that would work. But yeah.
So there is a desire in the banking system, in the legacy system, for a bottom-up collapse where bigger banks will absorb the assets of smaller banks until there's just a lot less banks. It's a lot easier to manage a small amount of big banks than it is a big amount of small banks. So you have the federal home loan thing, scammy loan program, which is just a discount window for tiny banks. That's been hit for $450, almost $500 billion in two and a half weeks. You have the Fed's garbage program, which it's all a joke because the Fed can't write checks. So all this crap is pushed out of the Treasury. It's financed by the Treasury. So essentially the Treasury is financing these limited term par deal. It's like a long-term repo is what it really is, where they hold these bank assets so that the banks don't have to take the hit on them. They can, get closer to holding to maturity. And then if you back out the entire banking system, every bank is always bankrupt, all of them, because you can't have a system of fractional anything. If people want their money back, the banks go away, all of them, the biggest bank in the world. If more than 6% of the people want their money, 6% of the deposits, it's over with because no one can cut that check. Even the US government can't cut that check. So if they can't cut that check, in the chat, please, what do you think they have to do? Right now, there's this is not easing. This is not any kind of easing because it's just a loan. It's like a payday loan for banks. It's a loan and then they'll get their asset back. So it's a repo transaction. So what do they have to do if the government has to write that check? Oh, and by the way, there's going to need to be a giant bailout in pension funds. Why? Because no one's making 7.5%, and a pension fund needs to make 7.25%, 7.5% in order to match their inputs with their outputs in the form of stipends and annuities. Do you know this, Brandon?
Oh, no, I didn't know this.
So you can't run a zero interest rate environment and expect banks not to go out further on the risk curve because you can't get 7.5 out of zero without taking risks. And then you go and say, oh, these banks are being too risky. I like how all these D-bags on CNBC, these banks are being too risky. Being too risky. None of you a-holes were talking about these difference, maturity, and all, like the differences in maturity and the cost of cash if depositors hit the exits. Nobody was talking about this 3 months ago. Nobody. Not even no one at the Fed, no one at CNBC, no one at nowhere. Because the assumption was if the government pushes you to buy treasuries, bills, notes, and bonds, then you're safe, bro. They tell you there's nowhere else to make money, interest rate fallacy, so go hide in government debt. Oh, wait, but if you hide in government debt of a longer maturity, you get nuked when your investors want their money out. Oh, weird. So what have we learned? Oh, that deposits at a bank are actually liabilities, not just liabilities on the bank, but liabilities on the government. Weird. And at some point to write that check, if you add pension funds to this banking meltdown, which is still happening, by the way, then you get a check that they would have to write of 50 trillion plus. 50 trillion. Anybody know how many F and zeros that is? This whole thing is a Ponzi. God. And so, yeah, when you have a system where all these 80-year-old plus, old codgers have been put mostly either put or their political positions protected by legacy financial institutions. There's a lot of like financial monkey on your back to just go with the status quo. So yes, they're scared of not just like crypto in general. They're scared of going to an open, permissible system. They're scared of going to a trustless transaction system. Scared because Why do you need to use a bank if you don't need to use a bank? You know, there's tons of people that bank through Walmart. Like you can get a bank account through Walmart, through those little boxes in Walmart. Do you guys know about that? Have you seen that, Brandon?
Yeah, I mean, Walmart does it all. They're a one-stop shop.
You can get a bank account at Walmart. So you start thinking, geez, man, that's crazy. Yeah. So it's a very small step. Look, the whole banking system, the legacy scammy garbage system, it's already a distributed ledger. It's just a clunky, slow, crappy one where people can pull scams behind the scenes and basically take your money. Because all this came, Brandon, do you know like where banking basically came from?
The people of old, the Egyptians.
17th century gold traders. So they would have gold and you would want to buy something, but maybe you wouldn't want to use gold or you couldn't cut the gold, whatever. So you'd go and take your gold and give it to the gold traders and they would give you an IOU ticket. Yes, AJ, like a little ticket, like I owe you this much gold. Pretty soon, people just started trading the tickets. Well, the gold traders, I guess you could call them depositors too, or depositories, early depositories. They would charge a fee for the gold held there, like a depositor's fee. The problem is they couldn't, if everybody started trading these tickets, so everybody gives them their gold, they start trading the tickets, they say, screw the gold, let's just trade the tickets. It's a lot easier. That way I don't have to carry gold around. Great. So now they trade the gold around. The problem is that the gold depositories could no longer assess fees. They're like, well, wait a minute. You're not the one who had the ticket for the thing with and people are just trading tickets. So they're never coming back and hitting the gold. They're not grabbing the gold. So then how do you think the traders made their fees? I mean, the gold traders made their fees. They just printed more tickets. So they created this fractional reserve system in search of fees. So if this system's been around for a while, but if you look at it, they were always bankrupt. The people with the paper really had a call on nothing, just a handshake deal. Oh, I guess this paper counts. So you don't have to look too far back to see that banks have never had any solvency. It's just this trust in the system. Now, the last time there was a shake in faith, what was it 1930? Was it 1933? Was like one of the earlier huge banking collapses. And of course, there was a lot of stuff in the late 1800s, which is why there's a Fed, and that's all a whole scammy thing. But when all of this stuff kind of went down, I think it's 1932 bleeding over into 1933. This is when they said, okay, to prevent bank runs or backstop banks, we'll just create kind of rather than going to a hard money system, which again, I don't agree with, but they said, well, we'll just backstop with insurance, ergo FDIC. And I think at that time it was $2,500. Now, do you want to guess what FDIC insurance really is? Kind of based on what Janet Yellen kind of said and what the FDIC basically said and what the Fed kind of intimated. Trust me, when you see them having 3 Sunday meetings in a row, everything ain't fine. You know, the last time they had 3 Sunday announcements from the Fed or Treasury in a row, it was 2008 and Bear Stearns had just collapsed. Like, do some common sense thinking. Do you think everything is fine right now? Why the truck would you leave, or to use Brandon's parlance, why the flip would you leave more than $25,000 in a bank account right now? Especially if you're at a regional. Listen, for those of you that are at charter and regional banks, you better go do some homework. You better go look at the implications of Obamacare on your FDIC protected funds. They're not bailing those banks out, bro. They're going to let them collapse. Now, your deposits may eventually be reenacted at the bank that absorbs those assets. But if there's a run on small banks, ain't no money. 25,000 is the number, not 250K. The rest they give you in this kind of weird structured IOU, repayable at whenever they want. It's a bailment agreement. You're owed your money whenever they get around to it. You don't really have a direct legal claim on your money. Yes, credit unions, states, regional banks, they do not have the same protections. You do not have insurance. And because of Obamacare, it doesn't matter where you're at. You don't really have any kind of protection over 25,000. Go read, do your research. You'll be shocked at how little money you actually have that's insured. So when they say these banks, this bank is 50% uninsured, that just means that the aggregate insurance of $250K is about half. So most people have a $500,000 account. Guess what? That's like 90% uninsured for real. So either there's a huge banking collapse, a slow banking collapse, or the government has to write that check. At some point, that's got to happen. The key for us as investors is like, what's that timeline look like? Is it 10 years, 2 years? No one knows that. I'm telling, don't go out because Nick was on one because he had too much caffeine and start buying gold. That is not what I'm saying. So, and just so you know, I keep my loose currency units in USDC and I collect 4% on it. Who here's collecting 4% on their US dollars in a bank account? Hashtag nobody. All right.
Questions.
So there we go.
You seem passionate about this. This is good. No, this is a transition here.
Let's do it.
Question your thoughts on CoinLedger. I haven't had to report crypto on taxes yet. You've seen that, I guess, right? CoinLedger.
Listen, you got to talk to your tax professional. I can't give you tax advice.
Yeah, that makes sense. That's an easy answer.
I'm not an accountant, bro.
I like that.
I don't even look like an accountant.
This next question.
Last time I got in a bar fight, I punched an accountant. You know what? She deserved it.
Oh crap! What? Get out of here. Have you heard how the government docket packet number 16.7? It's about 51 pages long. It's about the government, the Fed, switching over to a cashless system. How do you think this will affect crypto investing in the future?
I mean, they already have a cashless system. You ever try to deposit cash at your bank? They look at you like you're a terrorist drug dealer. We're already cashless. Society's already 92%, 95% cashless. We're already there. It's just a couple of old codgers that hold on to their coins. You can pull them out of my cold dead hand. Yeah, we will.
That's interesting. This next question is strange. Okay, so got a heads up from a lawyer. UCC rule HB 1193 claiming it would prevent all or virtually all existing crypto from being considered money. We saw them ban online poker. How does this turn out?
Okay, does anybody play poker? Does anybody play online poker?
The whole world?
Yeah.
Okay.
It makes no difference. You can't ban sunsets. And also, crypto is not money. Well, let me turn it around. Digital assets can be money if they're used to repay debt. But you know what? So can sticks be, and pieces of paper and wadded up gum. Anything that extinguishes debt is money. Anything. So I would not worry about heads up from UCC lawyers. These are usually the same guys that tell you that you don't have to pay taxes because at some point in the late 1700s, there's some rule. Like I would not pay attention to that. And I would pay attention to the regulation that does get passed, which still waiting, still sitting on that bench with old Forrest Gump waiting on regulation. My guess is the U.S. will have pushed crypto outside the U.S. jurisdictionary purview. I mean, listen, if they push crypto out of the U.S. and they push these companies out of the U.S., then your currency units are out of the U.S. So how does that work out for the U.S. as they're trying to raise more money to bail out all these broken banks? Methinks the lady doth protest too much. All right, next question.
Last one. Do you think the recent tech layoffs in Google are AI related?
You know what? They will be, but not yet. I think the AI layoffs haven't really started yet. I think the Google layoffs, remember this, it's Google, it's Microsoft. I think that they were mostly related to 2021. A bunch of people at a tech company and many companies, Amazon too, lots and lots of people, Microsoft as well. What it is in 2021, a lot of people looked at the economy completely wrong, including people that you guys listen to every day. Not this guy, but many. and they looked at the economy and thought, ooh, this is inflation. The economy's awesome. And they saw number go up and price go up, and they confused that for actual inflation. So dummies don't understand that there's different kinds of price effects. And if you get the wrong signal, if you think inflation cause economic growth, when everybody's getting paid $800 to sit on their couch per week, if you confuse that, you might go and hire a bunch of people like a dummy. These companies, like dummies, hired a bunch of people. Now, 2 years later, they're like, oh crap, all that inflation was just the monetary realities of supply dislocations and political effects of, like when Russia attacks a country and goes to war, and like oil prices skyrocket, and like all of these things that happen in weird, dislocated economic systems that aren't inflation. So they hired a bunch of people. Now they got to fire a bunch of people. So the first thing they do usually is, like, I know that I think in Google's case and maybe in Amazon, they gave people like 2 months. 2 months of like paid, kind of not quite severance yet, but like paid stay at home, go look for a job money. Then the severance will kick in. Then the layoffs will kick in. So my guess is we're going to see some ugly unemployment numbers coming third quarter of this year. And everybody will be like, where did this come from? Like, you dummies, it was obvious for 2 years this is going to happen. Like, how can people be so stupid? But they are, and that's what it is. So these are layoffs because of bad decision-making. The AI-related layoffs, that's going to take a while because you're going to have a lot of companies that are like, no, we're going to keep people employed even though they're redundant and useless. It's like these squiggly line traders that think they're going to beat AI. Okay, exhaust all of your investment income until it's zero. Then come join the digital heavyweights and I'll help you build all of it back times 100. Like, God, stop thinking so short term. Do you not see it's so effing obvious? It makes me, I feel like, you know what? Okay, Brandon, here's my final thought. The reason that in the heavyweights that we feel like we can see the future, like we're gypsy, like, what is it? It's not a, you don't go to a psychic, but like a future teller, soothsayer, whatever. The reason is because we're not stupid. Because we realize that humans have a lot of errors built into our system. These are cognitive biases. You study cognitive bias, you study game theory, and you understand the actual economy you're looking at, then you are a soothsayer, you are an actual Nostradamus, and it's easy to win. And you don't have to stress out every 16 seconds over making some squiggly line, stupid ass trade. Common sense, people. Stop working so hard to make so little. We'll see you tomorrow on the Digital Heavyweights. Brandon, did you have any final thoughts?
No, I agree. And it's not even just the future, Nick, like what you just mentioned. It's not even the future. It's the past repeating itself just in different ways. It's the evolution of man using different things to basically progress their own livelihood through different avenues, and crypto's the next one. So it's like we've already seen it happen before. We're just predicting the next one through crypto, and that's all it is. So
and it's so obvious. It's so flippin' obvious. Anyway, it is what it is. Good luck to everyone. I know you'll squander that luck I just wished you, but I'll see everyone in the heavyweights tomorrow. Stay in school. Don't do drugs. Don't do anything that my poor insolvent drunk, strung out on meth grandmother or Brandon wouldn't do. Did you just mute yourself?
I didn't mute myself.
I didn't say like Nancy Pelosi.
No, they don't know that because I muted. I muted for so long. They don't know that
I should have cussed my entire way through that. All right, we'll see you guys tomorrow on the heavyweights. Pew 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 pew.
Since we started trading this strategy, it's delivered nothing